Hello and welcome to a new video. Today we talk about support and resistance and a few lesser known facts about this very important trading concept. So first of all, let's start on the most important things first. A big problem I always see traders make is that they start by drawing support and resistance lines by focusing on the left side of their charts, and then they try to come up with some random lines and then hope that something again will happen in the future. But it's very important to understand that the right hand side on your charts, it's much more important than what has happened in the past, because the most recent price action is always more important than past or historical price action. So when we draw our support and resistance lines, we always start on the right and then work our way back. So in this case we would identify important swing highs and swing lows, and then start by drawing our support resistance lines here. So and now we can see last week we made the swing low and price found support here, and after it hit the level it moved higher, so we can draw our line here. And now we look at what has happened in the past. You can see definitely it has been acting as support here. Here was not that clear, but that's okay, we will see later why. Here as well we overshot the level a bit, but definitely some reaction around here. Here then it was very clear again, and here as well. So this is indeed a very important level, and the most recent price action confirmed that. But now it's what is the interesting thing is about support and resistance. Instead of using single individual lines, we use support and resistance zones. You have to understand that price is a very dynamic concept, and volatility and momentum always change constantly. So it's very hard to make trading decisions off of individual lines. And especially if you analyze future price information and plan your future trades, you will see that making trading decisions is very difficult if you just use those thin lines. So in this case we would look around this support level we drew before, and then we would try to find a lower level that would then capture more of the price action and add some more explanatory value. So we draw now our support line here, so we can capture those lows. Here as well, very nice reaction. Here as well it captures the highs, and here again. So this would be our first support zone. You can see that it explains the price much better, and now next time we move into the lows, we have a much better frame of reference, and we would understand in a much more efficient way that something could also happen and would be still a valid trading idea if price breaches the first line and makes it into this zone. So here's another very interesting concept about support and resistance. When we look at this violation here, it's important to understand that support and resistance is a very popular topic, and many traders follow this concept in their trading. So if you have a support line like this one, which is very obvious at that time, you can see very precise reactions always around the same level here as well, and here those touches all almost to the pip. So around that time, when we price just consolidated sideways, almost all traders were probably aware of this level right here. It's also, if we look at it, is a round number 77, which is a very important psychological concept as well. So what happens around those obvious areas is that amateur traders, they always enter their trades too early. So some of the traders would have probably bought much too early here, and they hope to see this rally. And then what then usually happens is that the professional traders, they come and enter the market. They try to drive prices lower, which then squeezes the traders who have entered their long positions too early. and then those amateur traders are forced to sell their positions to the professionals, obviously. And also on the other hand, when this breakout happens, at that time probably a lot of people would have sold the early breakout, and again they would have sold to the professionals who took the other side of the trade and then reversed it and drove prices higher. So in the end, the amateurs were always left with nothing, and they sold on their positions to the professionals. So this is the spike is called a spring pattern in the classic Dow theory, and it's the good rule of thumb is that the more obvious the price level is, the harder it becomes to profit off of it. So always wait for confirmation around those levels, either in the case of a breakout, a confirmed breakout where we would have closed below this level, or if you wanted to buy, then we would have waited until price moved higher. But never just predict something around those support lines and then just enter your price too early without seeing confirmation. Okay, now let's try to find a new level, maybe to the upside. So this week we moved higher, we had this nice rally, and then price stopped around here, and price made a new swing point. As we can see right now, it's moving lower, leaving the swing point. And when we go back, we can see that there has definitely been some reaction around this level. Here it came short of the level, here it was very accurate, again here it did not quite make it. So if we want to create another resistance zone, we can use drag this a little bit lower to capture the lows. Then we would choose our line tool again, drag it to the highs to capture all the highs. I just draw the box to make it clearer. So, and now if we look back, we can see that this box included and explained much more of the price action going backwards. You can see very nice reactions all the time here as well, and now we are seeing the reaction again. So instead of using just single lines and then hoping that something will happen around them, we use those zones to add much more context to price action, and also going forward it makes analyzing price much more efficient, because you have much more confidence, and you're not left wondering about the validity of your support lines if those are breached, because now you understand that trading is not about finding single lines, but that price is a very dynamic concept. So I hope this makes sense, and if you have any questions, just leave a comment below, and I'm very happy to help you out.